Good afternoon, everyone, and thank you for joining us for our webinar this afternoon. My name's Nicola. I'm one of the directors here at The Right Loan, and I'm joined by Paul Gill, a fellow director. So we are extremely delighted to be working in partnership with Air Sourcing and helping all of Air members with their bridging and second charge needs. So we're here today to introduce you to The Right Loan, talk you through how you might spot an opportunity and how you can refer to us. So we are a specialist master broker specialising in secured loans and bridging finance. Our team, based at our head office in Solihull, have a combined 90 years experience in financial services, and many of the team come from a strong background, having previously worked in second charge and bridging before. We are customer obsessed and will make sure that we provide the same excellent service to your customers as you do. So I'm going to hand over to Paul, and he's going to talk us through how you might spot a second charge opportunity.
Good afternoon, everybody. So second charges basically are a secured loan, very similar to a mortgage, but obviously have a second charge. They're predominantly used for a number of reasons. The first one mainly being capital raising. Could be for any particular legal purpose. Debt consolidation is obviously a big one. Scenarios where, for example, a client has a mortgage with a high street lender tied into a 5-year fixed rate, don't obviously want to pay the redemption penalties. Obviously a bridging loan could be used, second charge could be used to facilitate the additional borrowing, and then obviously repaid when the mortgage came for review and a remortgage was conducted. Quite often we find scenarios where a client has had changes to their credit profile. So it might be they've missed a couple of payments at times of difficulty, for example, loss of job, ill health, etc. In cases like that, with a high street lender, it's not always worthwhile moving across to borrow additional monies and moving the whole mortgage to a new lender, taking into account the current credit profile. So we can arrange a second charge, leaving the first charge with the high street provider at the most competitive rates, and obviously arranging the additional borrowing, taking into account the credit profile with a view to clear those monies off, either with a remortgage or equity release, if they haven't yet reached the required ages. So some of the options with the bridging finance, again, very similar with equity release. It's not always possible to arrange an equity release for the right amount at the right time. So things like purchasing auction property or purchasing as additional properties. It could be for things like home improvements. One of the big areas we find with equity release is that, obviously, as we all know, that most of the onus is on the condition of the property, the location, the value of the property, not so much necessarily based on the client's payment profile. So we find an awful lot of issues with equity release properties where the properties need some work. It might be the clients are looking to raise money to refit bathrooms, kitchens, gutterings, general home improvements. Obviously that's fantastic, but the downside, of course, is depending on how severe those home improvements or the need for them are, it can sometimes negatively impact the valuation or indeed the lender's willingness to lend. So we do find a huge amount of bridging opportunities combined with equity release, where we can look to raise the monies to have the property repaired, new roof, new kitchen, decorating, damp course, various options, get the property in absolute tip-top condition, and then obviously we can get you guys can get the best possible rate on the equity release, making sure that not only does the equity release go through, but you obviously increase the property value, the client gets the best deal possible, and obviously everyone's very happy with the outcome. Again, some clients are looking to buy second properties, that can be arranged, or projects with regards to land, knocking down an existing property and rebuilding it, more significant works. But I think the main one for the equity release model is where property needs work to be done in order to realise the equity release potential.
So just to add what Paul said here as well, so you'll see on screen, if in doubt, we'll sort it out. So if you've got a case, you're not sure what to do, perhaps it's complex, you think it might fit, perhaps with a bridge or a second charge loan, send it over, refer it across to us. Our team will take a look And we view ourselves as an extension and a partner to your business.
So a couple of scenarios here for you, just to sort of give you an idea of the sort of cases that we can work on. These are all real cases, so this is all factual information. A couple of examples. So first one's a bridging example. With an advisor who sent across 2 clients, recently started a new SPV limited company looking to develop and sell properties. They'd found a property, it needed a lot of work, full renovation, things like kitchens, bathrooms, wanted to alter the basement and add another bedroom. To complete the purchase of this property, they required a 55% loan to value. The main issue was it was only their second purchase, which means they'd not got a huge amount of experience. And one of the things in these areas, lenders are looking for experience to know that they've got a proven track record of doing this type of transaction. However, the property was expected to have a fairly significant increase in value after the work was completed, and their plan was to sell the house on, so a bridging loan was indeed the best option for them. After some research, we was able to recommend a lender who would look at the client's situation on a case-by-case basis. They obviously were happy with the level of experience the customer had in this particular forum. We were pleased to get the case offered, processed and completed within literally a few days. So fantastic outcome for the customer. They were able to realise their dreams in this particular case. Obviously there were good money being earned by them in relation to the profit on the property. The introducing advisor was able to keep his customer happy and as one of his customers, rather than the need to talk to alternative brokers. And indeed there was some monies being earned as well by all parties, so sweetened the deal a little bit more as well. The second option, or second example, is a secured loan. This is an example of a client who maybe initially inquired about equity release but turned out to be too young. I'm aware that talking to a number of equity release advisors, obviously you pay an awful lot for the leads. When they come through, not always can you do something with them. And I think, from experience, that a large part of the non-placeable cases are because the clients are too young. So they've seen something advertised about equity release, made an inquiry, you guys have paid out for the lead, which we all know is very expensive. And of course you can't do anything. So, if you can't do something, what else can you do to recuperate the monies that you've laid out on leads so you can actually afford to buy some more leads? This particular example, the client had been sent across by an equity release advisor. He'd been made redundant in 2018, was too young for an equity release. He'd had some credit commitments, was paying out quite a large amount each month. I think 8 different loan providers from memory. Unfortunately, because he's changing income, the client had missed a few payments and obviously incurred additional fees. This has obviously impacted the credit score. Got on to find a new job, which was fantastic. But unfortunately, as you all know, this mark on the credit file stays on there for 6 years. So we were able to look to raise a second charge to clear all of these debts off. I believe a figure of £45,000 was the one that was the end figure that was needed. We were able to repay all the debts, significantly reduce the client's repayments, get the things under an even keel, get them back on top of things and making sure things were all being paid on time. And then fantastic news, pass that back to the equity release advisor. And in 3 years' time, the client, it's very good these days to be too young for something, but in 3 years' time, the clients had reached the required age, at which point an equity release was possible. And the equity release advisor, not only did they do a good job, keep the clients happy, they went on to do the equity release as well, which I believe gave them again, another opportunity to help the customer, but also to earn some more money for themselves. So fantastic job all around with that one. Another example on bridging. I think the bridging is probably going to be more common with the equity release side of things. We had a client's details sent across. This one was an experienced property developer. He wanted to purchase a 2-bedroom flat as an investment property. Excuse me. A £30,000 deposit. It was at auction, and with auction, as you're all aware, they have to complete within a very, very short period of time. Sometimes equity releases can take a little longer. The solicitors tend to be very focused, as I'm sure you're all aware. However, the problem with this case, if he didn't get the funds through on time, he would lose the property. It was very rigid as to the time he must complete within. And I believe also the £30,000 deposit was at stake. So to say the least, it was extremely urgent. We were able to express this case, get all the paperwork collected, approach the lender that we do a lot of business with, explain the urgency of the case, and they were able to again up their service standards above and beyond, and within 7 working days we were able to get the funds released. Massively important for the client. Was a leader belief that wasn't going to fit with equity release, so the advisor recuperated some money, is able to reinvest those monies in more leads to drive his business forward. Great job for the customer, and hopefully some referrals as well. Moving on to one or two more examples. Clients had come in about equity release. They had a property worth around 600,000, and it's a bit of a complicated one, this one. He wanted to buy a property. It's a property that was currently owned by his business. He was in the process of retiring, selling the land, but he wanted to buy this cottage that his business has owned. There were some other shareholders, so he agreed a purchase price. We looked to, obviously, the building that his business was located on was going to be sold, and there was planning permission almost in place for that. So he'd seen equity release, didn't want to make a payment. He'd inquired about that. Advisor sent it through to us and said, look, this is what he wants to do. He's going to pay it off in 9 months' time when the land was sold. Clearly, that's not equity release. Obviously, the exit redemption penalties, etc. So we arranged a bridging loan. Client's very happy. The land has been sold, I believe in excess of £2 million. Loan was repaid. Fantastic job for everyone involved, and I believe we've had 3 or 4 referrals from that particular case. Finally, and again, I'm just going into a few details to give you the sort of diversity of what can be achieved. But this particular client wanted to raise £50,000 on a property worth 140. Unfortunately, it was in a fairly poor state of repair. The roof needed to be replaced effectively. There was rotten timbers and tiles missing, and unfortunately, because the roof didn't work, that had let water in, which is kind of the job that roofs do. And therefore there was extensive damp, kitchens, bathrooms all damaged, various decorating issues inside. Now, whilst it was obviously possible to do equity release once the property had been restored, customer had no money, couldn't afford expensive loans, so we arranged a bridging loan to fund the repairs, which was new roof, kitchens, various bits and pieces, got the property to a good state of repair, and passed the lead back to the advisor, who was then able to conduct the equity release. Again, much better rate of interest, property had increased in value, the client was extremely happy. The equity release advisor was probably, I'm not sure who was more happy, to be fair, but both seemed very happy, and yeah, good job all round. So that gives you an idea of what can be achieved, but as Nicola said earlier on, I think when you get a case, if you can't do something with it, don't throw it in the bin, send it across to us, and we can have a look at what can be achieved if that answer is not equity release. Equity release is good for lots of people. It's not always good for everyone at any given point in time. So if you've got a client, don't waste the money on the lead, send it across, we can look to do something for you, and obviously pass that back to you to help you move that forward at the right time for the customer.
So moving on, you'll see that we have a fantastic wide range of lenders across our panels on both second charge and bridging. Some that you perhaps might be familiar with, some others perhaps not. We've worked really, really closely with all the lenders over the last couple of years just to fine tune our processes, just to ensure that any cases that we submit to them run through nice and smoothly, and obviously as quickly as possible.
So some of the products we have available to us, and again, this obviously sort of stating the obvious, but second charges, we've got a full spread of lenders across the market, so we can always get the most competitive rates, the best deals, and obviously the best service standards. Bridging loans, again, across the spectrum, huge range of lender choice, different terms, conditions, interest rates available, and that basically means that we've got the ability to find the best and most suitable outcome for your customers. We're also pleased to be able to offer commercial finance options and development finance, both a little bit more bespoke, but again, we'd be very happy to discuss that on a case-by-case basis with you, and we can take them off your hands just to make sure that you're not detracting from what you do on a day-to-day basis. We can do all the advising, liaising with the clients, and simply you receive the monies at the end of the process.
So how do you refer? So you'll see on screen, refer, relax, receive. It really is that easy. So all you need to do is refer over your client's name and your details to the right loan. Now you can do that either directly on our website, over the telephone, you can do it via your Air telephone help desk, or you can even do it from within the Air sourcing system itself. So once you're in the fact find, you'll see a tab called loans, and you'll be able to use our direct links straight out of the Air sourcing system. So once you've passed it over to us, you can sit back, relax. We will look after all the advice, all of the compliance aspects. We'll keep both yourself and your client updated throughout the whole process. And on case completion, you will receive competitive referral commissions directly from Air. So service standards and what your clients can expect. So obviously once inquiries are sent over to us, we'll endeavour to pick them up same day where possible. If they do come over slightly later on in the day, then we'll pick those up first thing in the morning. We're a trusted brand. We make sure that we provide regular updates both to yourself and your customers. As we touched on earlier, you know, our team have over 90 years combined experience within financial services, as well as in more specialist areas, including second charge and bridging. And we are customer focused, we are customer obsessed. We will ensure that all your clients receive the same excellent service that they're used to receiving from yourselves. And again, you know, we're proud of our sort of market leading conversion rate. So we will go above and beyond to make sure that, you know, we can place your case.
So what's in it for you? Obviously we have market leading conversion and commission rates payable to you via the Air system. The average commission we pay is around £1,700, which is obviously from historic cases as to what they've been worth going backwards. The main thing for you is to keep your customers. Obviously you pay a lot of money for leads. It's very hard to get a new customer on board. Once you've got a customer on board, you don't want them to lose them to another broker. If you're unable to provide what they're looking for, chances are they won't stop looking to do it. They'll probably look to say a second opinion, speak to someone else, maybe the bank, maybe back on the internet, and someone else is on the phone to them. What's really important is, you know, you keeping that customer. So if you send it across to us, we will obviously provide that service, that expertise to your customers, refer it back to you. And obviously, as far as the customers are concerned, they still, you know, you still receive the benefit of that transaction, not only financially, but how they perceive you in your business. There is no risk of cross-selling. We won't look to tread on your toes. And obviously, if any other opportunities are identified throughout our sales process, such as a customer wanting any general insurance, again, maybe life insurance, maybe not so much with the equity release clients, but you never know. Things like wills, estate planning, all of those things there, we obviously would identify those opportunities and pass them back to you. So not only do you keep the customer and get another income stream without actually doing any work, what you can also do is have opportunities sent back to you to say, look, you know, this customer is expressed an interest in this, or this. Is that something you'd like to pick up and take forward? So again, it's an opportunity to get the money back from the leads you've spent, earn quite significant extra monies without actually doing any work, keep hold of the customers, and make sure that if it's not an equity release today, it's still your customer to be an equity release tomorrow, and then obviously have other opportunities sent back over to you.
And that's the end of the webinar. So thank you very much for taking time out this afternoon to join us. As I said earlier, we're really excited to be working in partnership with Air, and we look forward to working with yourselves very soon. Our telephone number, website and email address is on the screen, so you can refer directly via those means. Alternatively, you can refer directly via the Air system as well. So nice and easy, and thank you very much for your time, and we look forward to working with you very soon. Thank you.